Welcome to the Bullvine Podcast, your go-to source for inside stories, cutting-edge research, and the latest updates in the world of dairy farming. Our 108th episode is about the newest dairy market trends. How will global changes affect your farm's profits? Find strategies you can use now. So please grab a glass of milk, sit back, and let's get started with this episode.
Over 600 million families worldwide rely on dairy farming. Still, the industry faces significant challenges, such as changing market prices and unpredictable weather. Picture farmers in New Zealand waking up to find that whole milk powder prices have shifted overnight. That's the reality of the dairy industry. Understanding global trends is crucial for farmers as it assists them in making informed production decisions, securing favorable deals, and maintaining resilience in the face of unforeseen circumstances. Farmers can improve their production and financial planning by staying updated on market dynamics and staying competitive in the ever-changing dairy market.
The European Energy Exchange, EEX, and the Singapore Exchange, SGX, are key platforms for dairy market trading, providing valuable insights into market dynamics and trends. A glimpse into the complexities of the dairy market through these exchanges can help dairy farmers and stakeholders make informed decisions. The recent trades on the European Energy Exchange, EEX, show some interesting patterns in the dairy market. Last week, 3,085 tons were traded, mostly in butter and skimmed milk powder futures. Butter futures increased by 1.8%, indicating strong demand and insufficient supply. This rise could push dairy farmers to make more butter for better profits. But S&P prices dropped slightly by 0.5%, suggesting there might be too much available or people aren't as confident about it, which might lead farmers to adjust their plans to stay profitable. Changes in what's being traded also give clues. The increase of 154 lots in EEX butter futures shows more trust and hope for future price hikes. Meanwhile, a slight rise of 21 lots in S&P might show cautious or gamble-like buying despite the price drop. These changes show market trends and give dairy stakeholders an idea of what to expect and prepare for. Keeping updated can help farmers stay strong and do well in the ever-changing dairy world.
Last week, the Singapore Exchange GX buzzed with dairy trades, exchanging 9,742 tons of products. This shows the market is hot and investors are all in. Let's dive into the action for key products. Whole milk powder, WMP, skim milk powder, anhydrous milk fat, F, and butter. Whole milk powder, WMP, jumped 1.8% from Jan 25th to Aug 25th, averaging $3,732. This jump suggests that demand is rising, driving the global market's comeback and making buyers feel more confident. WMP is bouncing back nicely after some global trade ups and downs. Skim milk powder ticked 1.1%, reaching $220. This increase signals steady use and might mean more milk is being processed, mainly in Asia, which relies on powdered milk. Anhydrous milk fat, AMF, saw a slight dip of 0.6% to $6,731. This drop might indicate slow demand, such as because people are switching to other fats or because of changes in the dairy rules of countries that buy AMF. On the other hand, butter prices on SGX rose 2.1%, averaging $6,428. This rise points to strong buyer demand, maybe for baking and holiday needs. The future path of butter prices on SGX might affect global butter supplies, especially if more people go for high-quality dairy fats. Overall, the SGX futures market carefully balances demand and supply in the dairy market. The trends from the Jan 25th to Aug 25th contracts give clues about global dairy market shifts, showing how people buy and trade dairy products.
This week's European quotations highlight how unpredictable the dairy market can be, with prices shifting in various directions. Butter struggled, dropping prices by €91 to €1,356. German butter fell sharply by 2 to €7,425, while Dutch butter rose by €80 plus 1.1 to €7,200. These changes suggest uncertain demand and export challenges. Skimmed milk powder, SMP, remains steady, rising by €42 €1.7 plus 565. German SMP went up by €5, 1%, but French SMP jumped €120, showing strong demand in France. Whey presented mixed signals. In Germany, prices increased by €5 plus €880, while declining by 10 of 1.1%. Meanwhile, Dutch prices rose by 23 cents to €900, suggesting changes in whey processing. Whole milk powder, WMP, faced a €43 as 1.04 through 341.1. However, Dutch WMP increased 50 plus 1.1%, contrasting with France's decrease of 42.9%. These price moves urge European dairy farmers to stay adaptable, responding to supply issues and global trade changes. These shifts impact European dairy farmers' profits and plans while influencing global trade, deals, and market predictions.
The recent data on the EEX cheese indices shows mixed trends in the European cheese market, with some prices increasing and others decreasing. Cheddar curd slightly fell by €5, now at 4,707, possibly due to market pressures or changing demand. In contrast, mild cheddar rose by €3, reaching 4,724, suggesting steady demand or higher production costs. Young Gouda saw a more significant drop of 42 to 4,053, likely from a surplus in supply or shifting consumer tastes. Meanwhile, mozzarella increased by €101, hitting 3,930, indicating strong demand and possibly more exports or local use. These fluctuations impact cheese producers in Europe. Those dealing with cheddar curd and young Gouda must think strategically about production and markets to stabilize income. On the other hand, producers of mild cheddar and mozzarella could explore boosting production or expanding their market reach, taking advantage of the favorable pricing.
The global dairy trade GDT auction recently decreased, influencing the global dairy scene. The GDT index dipped 1.4% to TE371, showing changes in buyers' behavior and market situations. Whole milk powder dropped by 2.1%, with prices reaching $3,804, emphasizing ongoing market shifts. Skim milk powder SMP also decreased by 2.2% to $2,682, suggesting that confidence in stock and pricing is still paramount. These changes might be due to varying demand, currency shifts, and global political matters affecting trade. Despite this, butter prices climbed by 2.6%, indicating strong demand for dairy fats. The Solarec butter C2 price reached $7,580, $7,270 with current exchange rates, illustrating varying regional needs and costs. Cheddar and mozzarella did well, with 1% and 3.6% increases respectively. These cheeses are popular worldwide due to their versatility and established roles in many dishes. Thanks to firm trade deals and market tactics, the cheddar price hit $4,728. These auction results show the factors influencing the international dairy trade. Rising costs, changes in regional production, and shifting consumer preferences all contribute to this. Exporters and producers must stay adaptable and adjust their plans to succeed in these challenging times. The results aren't just numbers, but key signs of market trends, helping businesses find profitable paths in the ever-changing global dairy market.
Recent trends in milk collections in Ireland and Spain show some significant changes influencing their dairy industries and the European market overall. Irish milk collections. Ireland's milk collections increased dramatically in November, up 33.6% from last year to 510,000 tons. This jump is surprising, as the total for 2024 was down by 1.2%. Good weather extending the grazing season and improved farming methods and cattle breeds likely helped boost production. This growth is vital for Ireland's dairy sector, which depends heavily on exports. More milk production could help Ireland meet local and international customers, potentially boosting its European market position. However, a balance must be struck between increasing production and considering environmental impact. Spanish milk collections. In November, milk collections in Spain increased by 0.8% to 581,000 tons. For 2024, collections have grown by 1.5% from last year. This small rise is mainly due to slight improvements in herd management and better dairy infrastructure. However, it's not as significant as Ireland's increase, indicating that different factors are involved. Although not as impactful as Ireland's surge, Spain's growth supports local supply chains and might enhance its European competitiveness. Spanish producers should monitor European trade changes that might affect costs or access. Changes in milk collections in Ireland and Spain indicate shifts in the European dairy market. These changes impact market balance, pricing, and trade. The industry will need careful planning to take advantage of these developments while avoiding problems.
Farmgate milk prices in China's dairy sector have stayed at 3.11 yuan kilograms for 3 weeks. However, this follows 27 months of price drops, suggesting deeper market issues. One big reason is the supply-demand imbalance. Better production practices mean supply is higher than demand, pushing prices down. Also, strict rules may limit smaller dairy farms' ability to adjust, leading to more price drops. This long period of low prices affects the farming sector. It means smaller profits and more challenging financial times for Chinese dairy farmers. This might lead to fewer small farms and more control by larger ones. However, it also increases import demand, making China an attractive market for global dairy suppliers. With local production struggling, cheaper international imports are more appealing, boosting China's role in global dairy trading.
Traders are back to work, and milk bottling has been busy since Christmas. A snowstorm in the south caused people to buy lots of milk and eggs, leaving empty shelves in places like Texas and Tennessee. Now bottlers are rushing to get stock back on the shelves. This rush is affecting butter and cheese production. There are plenty of cheap creams, so butter production is rising. Producers are storing butter for later use. In November, butter production was up by 4.4% from last year, showing good growth. The market is stable, and butter prices are going up slowly. But cheese production has its issues. After the holidays, demand changed things, and earlier fears of cheese shortages led to some price changes. Recent data shows cheese production dropped by 1.7% in November from the previous year. Cheddar cheese production also went down, causing worries about trading availability. Despite these changes, cheese exports reached record highs because of strong international demand, especially from Mexico. This dynamic landscape presents challenges, such as fluctuating production costs and market demands, alongside opportunities for expansion and innovation for U.S. dairy farmers. More butter production suggests a strong demand for milk fat, which might raise milk prices. However, changes in cheese trends could keep prices steady or make them unpredictable, depending on exports and domestic production. In this quick-changing market, U.S. dairy farmers must be innovative, weighing short-term gains against long-term stability.
Whey and milk powder production trends present challenges and opportunities for the industry. Production of whey protein isolate has hit new highs, possibly driven by more health-minded consumers. However, whey powder production slightly dropped, suggesting potential market weaknesses. Whey exports fell 11.4% from last year, possibly due to changing buyer preferences and competition as China's buying moved towards Europe. This shows a delicate balance for producers between local demand and less international interest. On the other hand, milk powder production dropped 10.9% compared to last year, its lowest November since 2013. Exports fell even more by 19.7%, posing a challenge for U.S. producers. Fewer shipments to places like Mexico and Southeast Asia highlight the competitive edge of international producers, especially with a strong dollar and stable prices elsewhere. This data shows that U.S. producers need to rethink their export strategies to regain market share. Prices for these goods depend on production levels, global competition, and currency rates. Though whey prices have settled, the slight dip in whey powder stocks and steady milk powder prices suggest possible market saturation or competition. Dairy producers must manage changing costs and stand out to stay profitable. These trends call for new ideas and strategic partnerships to boost growth and tackle difficulties in these areas. As markets shift, improving production efficiency and staying adaptable are crucial for producers to succeed in this unstable market.
Futures markets are shifting, especially with Class 3 and Class 4 contracts. Class 3 contracts for January to April dropped about 20 cents, but are still over $20 per SEG-BT, which means income looks good. Meanwhile, Class 4 contracts hold steady or slightly higher at $21.10, indicating cautious hope. It seems like a good time to pay the bills, but farmers should stay prepared for quick changes. Changes in corn and soybean yields also matter to dairy farmers. Corn yield is now at 179.3 bushels per acre, and soybean yield is down to 50.7 bushels. This caused March corn futures to rise to 4.71 cents, leading to higher feed costs than expected. Farmers must keep strategies flexible for feed costs and budgeting even if they've locked in some prices before the fall. Tackling these feed cost challenges involves a few strategies. Farmers can use feed more efficiently and check out alternative feeds to cope with rising prices. Locking in prices ahead of time for some feed can shield them from market changes. Also, diversifying nutrition plans and using advanced feed technology can help manage feed costs and keep profits steady, even when markets throw surprises their way.
The dairy market is constantly changing, so keeping up is essential. Knowing how supply, demand, and prices shift can help you do well in the business. How are these changes impacting what you do? Sharing what you know could help us better understand the dairy world. Swapping ideas with other experts might bring fresh solutions too. Keeping up with market trends helps you make smarter choices and find new growth opportunities. The dairy industry constantly evolves, offering new opportunities and undiscovered paths to explore. Let's keep learning, adapting, and seizing opportunities to succeed in the dynamic dairy world. Jump into the chat below and tell us what you're thinking. We value your input, so don't hold back.
Thank you for tuning in to the Bullvine Podcast. We hope you enjoyed today's insightful discussion. Don't forget to subscribe, share, and leave a review. Catch you next time on the Bullvine Podcast, where bovine expertise and community come together.